Good morning, everyone. Thank you for joining us at PSG Wealth for another one of our full picture series. Today we have a chat with one of the titans of industry, the CEO of a company we hold in our PSG portfolios, that being Mr. Ross Mupita, the CEO of MTN. I am Ross Van Coller. I'm an equity analyst here, and I cover a couple of these stocks. Ross, thank you very much for joining us today. It's really very appreciated from our side.
Absolute pleasure, and good day to your listeners who are listening to this podcast.
Thank you. I'm going to dive right into it. We're going to start off with the general overview. Obviously, MTN has discussed recently and last year your ambition 2025. Your strategy for the next 12 to 24 months. Seeing as we 6 months into the year, can you tell us, maybe to start, what is Ambition 2025, and also how has it fared 6 months into the year of 2025?
Yeah, Ambition 2025 is the corporate strategy we have at MTN, and it's really driven by our belief that there is a structural demand for data services across Africa, and we also see a structural demand for financial services, particularly from those who are excluded by banks. And that's many people across markets, particularly outside of South Africa. And there are 4 key pillars to that strategy. The first is kind of building the most valuable platforms, and the key platform there that we're focusing on building and extending its capabilities is our Fintech platform. So that's strategy point number 1. The second leg of the strategy is really about leading connectivity operations. We're a wireless first business. We are investing more into fixed, particularly around home, and so the core connectivity operations, which take up about 95% of our capital allocation, is an important area for us to still see growth. Many of our customers, we're close on to 297 million customers, just slightly over half of them actually using data services regularly. So we've developed a strategy around that, which we call leading connectivity operations. The third element of Ambition 2025 is really what we call creating shared value, and 2 main legs to it. The one is how we think about broad-based ownership in the markets that we operate in. We think it's important as part of how we operate that local institutions, individuals own part of the company. And that's what we call kind of broad-based ownership, not too dissimilar to what we have here in South Africa. And the second leg is really around ESG, our commitments towards emissions reductions, our commitments towards social obligations, gender diversity. So that's the third there. And the final pillar of our strategy is really what we call accelerate portfolio transformation. And the key of that is focusing the business on Africa. We used to be a business that was in Africa and the Middle East, and we've retrenched over the last couple of years out of the Middle East. So that's a key part of our strategy. And then 2 other important components is really about how do we reduce the leverage. Historically, the group had quite significant dollar-denominated debt, which we've managed to kind of reduce. And the final part is the structural separations, particularly for our Fintech business. So that's, in summary, what Ambition 2025 is. And when you ask the question, how do we feel about it 6 months in? We feel pretty convicted that we're on the right strategy. I think the financial representation of that, you saw some of it in our Q1 trading update, and I think you'll see a bit more of it as we release our half-year results in early August at the MTN group.
Yeah, thank you. I'm glad you touched on the debts for a little bit. Those levels are much better levels than what they were historically. From a financial analyst point of view, very, very healthy levels that we, from a net debt to EBITDA perspective, are very, very happy with, and the group's obviously worked very hard at that. I'm going to touch on the cash flow in a minute, but while we're on the topic, your mobile money, Momo, Fintech, as you've mentioned, obviously seen incredible growth over the last few years. I see the monthly active users are about 63 million.
Yeah.
Which, when you put that into perspective, obviously that's the whole of Africa and beyond. But that's essentially the entire population of South Africa, 65 million odd, which is incredible. So that's a huge key growth driver for you. We've seen the partnerships with MasterCard. What is the strategy going forward? Are there more partnerships involved? Are there synergies to be seen? Maybe if you can just touch on that for a bit.
Yeah, we're excited about the mobile money fintech business. We've been at it for 15, 16 years. If you see where we started off in countries such as Ghana and Cote d'Ivoire, that's when we started in about 2009. And these were very simple, money businesses, cash in, cash out transfer business, P2P, and obviously that's evolved over time. And so the last couple of years, we've been very focused on ensuring that this business, which has been scaling fast, is fit for the future. Just a couple of data points. When I joined in April 2017, we had 17 million monthly active users in mobile money. Now it's 63, as you say. So it's been growing very strongly. And I watch a couple of metrics, the kind of monthly active users, but also transaction value. And in constant currency, our transaction values were close on to 49%, in the quarter one, report that we sent out. So there is, a nascent demand for these services, given the level of kind of bank, and insurance company penetration in some of these markets. And that hasn't gone very far. And so it's created an opportunity for the likes of ourselves to be able to provide services. So we've been focused on a couple of things to build and scale the platform. The first is to start, developing the products that we believe are future fit. And we focus on three particular segments: bank tech, which is kind of like nano loans, the ability for our customers to be able to, take on loans, and these loans get repaid like in a 14-day cycle kind of max. So these are kind of high turn kind of loans. But we call that bank tech. So that's the one area we've been focused on. The second area we've been focused on is actually payments and e-commerce, which is where our partnership with MasterCard is there. And we partnered them on issuance and acceptance and started to roll out across several of the countries. And we're beginning to see nice trajectory picking up there. And in the third area is really around remittance. That's the other big opportunity. Africans in their diaspora, creating a significant remittance opportunity for us to build these corridors that allow people to send money to loved ones, being very clear where the remittance corridors. For sure, we focused on InsurTech, where we have a partnership with Sanlam. So we have a joint venture on insurance. And the insurance joint venture is one where, between ourselves and Sanlam, we know that this one, it will pay off in 5, 7, 10 years' time. But you must build it today. So it might not be the most exciting for many, but it is certainly an area. So we're doing the product set. We are building out the merchant ecosystem, so that, there is acceptance, at every corner, that where people have mobile money available. So that build out of product, build out of the ecosystem. And right now, we're also very focused on kind of investing in the technology that makes sure that we as MTN, become the equivalent of the Alipay for Africa. That's what we want to be. And so we're also focusing today around investing in technology, to be future fit and to be able to take on the digital native fintechs as these ones, come into our markets, or we go into markets where they're already present. So a very exciting opportunity for us, and one that I think will, continue to add value. And we're seeing, top line growth exceeding the growth of data services. So it's a very important part of the MTN equity story.
Yeah, thank you. It's good to hear those sort of 5 to 10 year stories. Sometimes we get caught a little bit up in the short term, but you don't see what's actually going into the long term, which is exactly where you guys add value. 17 million to 63 million monthly active users also over 8 years. That's a 4x number. That's incredibly high growth. So congrats on that. So let's talk a little bit about MTN's financials, more specifically around the cash flow. Strong cash flow from MTN. We've seen that over the years. It's consistent, high capex, obviously. But how do you focus focus reducing debt versus growth versus returning money to shareholders, whether that be via dividends? How do you strategize that, and how do you choose one in particular or allocate it?
Yeah, look, I mean, we're driven by, firstly, the kind of what we say, the financial formula for success, as well as our capital allocation framework. So the financial formula for success that we as management run the company on is that, over the medium term, our service revenue must grow above inflation. We operate in markets that, have some level of volatility, and inflation is part of that. So we say to our team, service revenue higher than inflation so that we get real growth. Let's manage our expenses very, very tightly, such that actual expenses are growing below kind of blended inflation. We have a capex envelope that is finite. We generally spend about $2 billion equivalent. And therefore, if we do all of that, we should see free cash flow generation growing faster than everything else. And ultimately, it boils down to free cash flow. So we're very cognizant of the fact that we're in emerging markets and need to deliver a real return. And hence that financial formula for success underpins how we run the company. From a capital allocation point of view, we've consistently, the last couple of years, had a very clear batting order of how do we allocate the capital. Capital is finite, so we need a framework and a batting order that is super clear in the organization, but also importantly, super clear to our investors. And we have these discussions and debates with investors from time to time. But at the top of our capital allocation framework is investing in organic growth. We still see a massive opportunity for data adoption and fintech adoption across our markets. And we're investing to capture these opportunities, very mindful that capital has a cost and we need to generate a return above the cost of capital. But organic investment is priority number one. And, if we got to the stage where we felt the organic opportunity was not there, that batting order might well change. The second is really reducing debt. And we've been very focused on reducing dollar debt. Ross, when I joined MTN 7-8 years ago, we had $2 billion of Eurobonds. Today, we have 500 million left. We've been able to pare down at the holdco level because we've been very focused on managing that mismatch between, the debt we have at the center and then the fact that we're earning rands, naira, cedis in particular. So the reduction of kind of holdco debt has been a focus. Now, sometimes my board and some of your shareholders give me a hard time and say, well, actually, your net debt to EBITDA at the group level is fine. It's 0.7 times. Why are you talking about holdco? But we've been very focused on that because there's been kind of historic concerns about the mismatch of that. So reduction of debt is number two. Number three is dividends in batting order. And we have an open dividend policy at the moment. And we took an open dividend policy when we had some challenges of streaming from Nigeria. And we said to investors, look, we're not going to give you a formulaic dividend policy right now because of uncertainty from actually our largest market. But we will pay an underlying dividend that we can commit to you and we'll annually declare that. So dividend is number three. And then 4 and 5, we've never had to tap those in recent times. Number 4 is M&A, and M&A that meets our strict criteria. And then the final one is really around specials, dividends, as well as buybacks. And buybacks has been a discussion we've had with several of our shareholders. And our position has been that, yes, we think of our share price is low and the multiple is low. But for the final capital we have, we really do believe we must put it towards growth. So that's the kind of batting order that guides how we kind of run the company and how we allocate capital.
Yeah, thank you. I've seen it in my career, the issue that certain companies fall into when, as you say, that misallocation or of debt versus earning in one currency, having to pay your dues in another currency can really be an issue when the currencies are either volatile and unpredictable.
Mm.
Speaking of currencies, can we touch on Nigeria for a bit? Because that
Sure.
has obviously been a talking point in terms of
Mm.
inflation and currency volatility, which has a material impact on your guys' revenue numbers and earnings numbers. How do you guys navigate that? It's a very unpredictable market. It's as you say, it's volatile,
Yeah.
but we need to plan ahead.
Mm.
How do you guys tackle that one?
Yeah, look, I mean, Nigeria is our largest market in many respects. You know, we have 82 million subscribers out of 297. You know, the growth trajectory there is significant. You know, we still see enormous amount of data growth, and the fintech opportunities is kind of at the very early stages, and we think there's runway there. So for Nigeria, the way we kind of think about it is what is the underlying growth that we see? What is we look at numbers such as on a monthly basis, what are the gross additions? What are the net additions? Where are they coming from? And you know, how is we look at what we call data cubes, we look at voice cubes, and that those rich data sets give us a clear view that, you know, even if the macro is looking challenging as we had last year, the underlying franchise strength is very high quality. So when we went through the challenges of last year, where there was a sharp devaluation of the naira, closed in 2023, 907 naira to the dollar, and then in January, early February, it was 13, almost 1400. So massive devaluation, and you know, causing obviously gyrations not only in direct costs, but actually in how the leases are accounted for. Our towers there are under leases. But what we always focused on was, you know, is the underlying operations of high quality? And if it is, you know, we've got to look through the cycle and we'll come out the other side stronger. And in the first quarter, that's been vindicated as a strategy. And the first quarter had a limited amount of the tariff increases that we managed to secure. And I think you'll see it in Q2 when the Q2 results come through, that, you know, these tariff increases in Nigeria have settled. So we're actually going through a period in Nigeria where the macro is relatively benign. You know, the currency is about 15, 1600, very little volatility. Inflation is coming down. You know, there's orthodox monetary policy. Dollars are actually available for those who want. And so for us at MTN in Nigeria, we're very focused on the issue of, you know, implementing these tariff increases in a sustainable way, not to lose our customers, and all the actions and efforts required to get us with a negative equity position that we are in, and get us to be able to restore, you know, the reserve position for us to be able to pay dividends. And we've communicated that as a priority for this year. So Nigeria, yeah, challenges, but it's been a market that for the patient investor has been actually quite rewarding if you kind of draw a line through the various time series. And I think it will still be a key cornerstone part of the MTN investment case going forward.
Yeah, no, absolutely. I don't, as you mentioned, it's poised for tremendous growth, as is most of Africa. There's a lot of opportunity here, but with that will come your challenges, and you know that's the risk to reward relationship all of us face in daily life, and you guys will face in a business sense. So thanks for the clarification on that. That's obviously been very a large talking point, I'd say, over the last year. Another large talking point very recently, because of our the political landscape we find ourselves not only in South Africa but in the world. Elon Musk, you know, on everyone's lips, and with that comes Starlink. But take the politics out of it. Let's, you know, there's those issues.
Sure.
What do you think of Starlink? Is it a valuable threat? Is it a competitor? Is it a disruptor? How do you guys view Starlink? Whether we see it or not in South Africa is a story for a different day. But let's say it is an entrant at some point. What do you guys view Starlink as from a business perspective?
Yeah, look, the privilege of operating in many countries, there's some downsides, but there are also some privileges. Is that, you know, we've already started to engage with the likes of Starlinks and others, by the way. in certain markets in Nigeria, in Zambia, to use but two examples. But stepping away, as you say, Ross, from the politics and just thinking about this with the technology lens, is the future of connectivity is going to be driven by fixed, communication, wireless communication, and this so-called non-terrestrial networks, such as LEO satellites, of which Starlink is one of them. And I think envisaging the future, Ross, that you're always connected. If you decide to take a cruise to Antarctica for whatever crazy reason you decide to go there, you will be able to leave Cape Town, off an MTN network, and as you go into the Atlantic, increasingly, moving from MTN network into a non-terrestrial network that's a partner of MTN, as an example. So I think the first thing we say is we embrace non-terrestrial networks. These LEO satellites, they're going to become an important part of our customers and businesses always being on. There's some businesses that are so latency sensitive, they cannot be off at any particular stage. And I think in future, you'll see them having redundancies in the form of either the fixed network is a form of redundancy, wireless, or LEO. So it's here. It's not going to go backwards. So we embrace it. The issue that we've raised, and we've raised it not only in South Africa, but in every country, is what we call for same service, same rules. If the service is to enable us to be able to connect, well, that must, if that's about connectivity, whatever applies to everybody else, whether it's data privacy, how do we do customer registration, and all of that, it must apply equally to everybody. And so that's the only issue that we said same service, same rules, or what others call regulatory parity. So if you do indeed want to change any parts of the regulations, Parliament must drive that. But if it does, it must apply to everybody. So that's all we're saying. And so, as I said, we're already partnering the likes of Starlinks in other countries. We partner for backhaul. So it's an efficient way of transporting data, particularly in remote areas where there's not a lot of fiber being built out or wireless. So that's one area where we're already partnering. But we will compete with the non-terrestrial networks when they're trying to go direct to consumer. So there's two sides. There is the wholesale relationship, with the likes of us, where we use it for transport. It's an efficient form of transport, to be clear. But we will compete. And I think, it's going to, physics, I'm an engineer, and I often, come down to what does the physics say? And the physics says that, it's quite difficult to beat the quality of fiber, from a latency and a capacity point of view. So yes, you can have your LEO satellite up in the sky, 550 kilometers from Earth, and you got to beam it up and it's going to come down. Now with fiber is, it has got, almost perfect latency. And so fiber and wireless is also with enough spectrum, you can also compete. So we see it as complementary, we're embracing it, but we are going to compete in other aspects, and that's okay. Key thing, same service, same rules, regulatory parity is all we're asking for.
Yeah, no, I completely agree. It is news to me that you guys are finding these partnerships. I find that fascinating. But at the same time, just because you're the richest man in the world doesn't mean you get to bypass the rules. It should be same rules, same for everyone. Compete on even footing, and I think that's completely fair to ask. That is a challenge, as you said, and you're going to compete. Is it your biggest challenge? What is in the last year? What would you say has been, as a CEO, as a leader, what has been the biggest challenge to you?
Yeah, look, for us last year was quite a challenging year from the point of view of how sharply the Nigeria currency devalued. I mean, we start off the year 2020, 2023, and you are kind of 400, naira to the dollar, and then you get to May, June, you go to 700, and then in December you're 907, and then first quarter of 2024 you're at 1,400 and people are telling you it's going to, 2,000, 2,500. And that's from a market that's at that stage 40% of the group earnings. So, the pain and the shock is very sharp. Look, we had foreseen that the structural reforms that President Tinubu was going to implement were going to be a bit of shock therapy to the system, to be clear. Floating the naira and, kind of removing all the other windows of exchange rates was the right thing to do, but the system depended on the previous forms of exchange rates, so the change was going to be painful. The second was the removal of subsidy. Nigeria had, since inception of independence, had these fuel subsidy, particularly on petroleum, that made the price of petrol artificially lower than it was. That got removed, and then there was a big push to ensure that production goes up towards 2 million barrels. So all of these were shock therapy, and so we had anticipated the shock, but it was actually much sharper than we had anticipated. To be clear, and it took a little bit longer than the 3 or 4 quarters that we said pain would come through. So for me, that was a tough thing to get through, and to rally the organization to say we're going through a bit of a seismic moment, given that our largest operation has had this massive devaluation. It will find its level, and when it finds its level, I think the true strength of the business. And so, what's been pleasing for me is that the strength and the resilience of our people, particularly the team in Nigeria, but the group more generally, is to kind of work through, what was a bit of a storm for us and kind of stay focused on what we needed to do as we pursued our strategy and executing it because of the big data and financial inclusion opportunities that we saw. So that was a real kind of quadrant test of leadership. And I wanted to thank my team and the guidance of the board for us getting through all of that. And the lessons learned there, which reinforced our position, is you must look through the cycle, continue to ensure that your business is well positioned to capture the opportunities that are in front of you. And unless you believe the macro is now structural, it's going to be cyclical and you'll go through it. So that's what we experienced. And I guess, Nigeria, you saw the Q1 results, which, as I said, I think had a little bit of the tariff increase, not a lot. I think you'll see, the strength of those results coming back through as we reported the half year.
No, absolutely. Sometimes you've got to take a bit of short-term pain for long-term gain. And a lot of people don't realize that these cycles work not over 1, 2, 3 quarters, sometimes over years. But as you mentioned, if the structure is there and the fundamentals are still positive and you guys are happy with that, then that's where you guys add value to these organizations and to business. So yeah, thank you for that insight. Then moving on, we're getting towards the end here. What, maybe as an investor, maybe as just a consumer, what would you say isn't spoken about enough at MTN that excites you? It doesn't have to be necessarily massive growth, but what does everyone focus on one thing when you think here's something that you wish got a little bit more coverage?
Yeah, look, I mean, there's a lot of focus, rightly so, on the fintech business, and it's a big growth opportunity. We see, kind of significant growth, for the next 5 to 10 years, and I think there's a lot of focus there. But I don't think there's enough focus, on the core connectivity business. The core connectivity business for me is exciting. I mean, we're deploying 95% plus of our capital there, and sometimes I get the sense that investors or stakeholders more generally are looking at the growth opportunity there as a bit of a dumb pipe and saying, well, it's like building the digital railways, nothing exciting. But, as much as we're going through this wireless revolution and we're probably only, 50% kind of through the cycle, if you look at, how many people are using smartphones to connect to our networks, that's kind of 55% order of magnitude. And so you've got another 45, another 130 odd million people that are still using 2G phones across our markets. That's 2 South Africas that are still using 2G phones across our markets. And to me, that's an exciting story that says, the growth is still to come. We've got to obviously be smart about how do we allocate capital to generate returns to pursue that opportunity. The home opportunity in a market like Nigeria is amazing. We're starting there where there's very little fixed investments. We're going to allocate capital responsibly to that opportunity. But for the team in Nigeria, this is another growth curve that they're seeing. There's enterprise within the connectivity. Many enterprises still don't have the technology, the connectivity they need. Many businesses in Africa are informal. And if you look to India and you see what's happened in India with the kind of Kirana business models for these informal settlements or informal businesses, to me, that's exciting. So, when I see the multiples often put against the traditional connectivity business, I think, part of me says, we're not yet close to dumb pipes in Africa at all. If nothing else, we've got another decade plus of kind of underlying growth as we move to connect customers, we move the cycle to enterprises, and the home opportunity where the workloads will ultimately be is a space for us to win. And so I'm excited about that. But I think, the markets gets very excited about fintech, which I am excited about, to be clear. But I think the core connectivity where the capital is allocated is extremely exciting as well.
Yes, I must say I am guilty of always looking at where's the massive growth thing. So I'm one of those people, but we do forget that the core revenue driver of a business doesn't necessarily mean it's a no revenue driver or no growth driver.
Exactly.
You look at the cost of smartphones just consistently coming down, cheaper models entering the markets. You mentioned 130, 140 million people on 2G. That's growth. But obviously we like to talk about the fintech and the buzzwords. So that's thanks for that. I'm going to ask you one last question. A little bit of a fun one. When I get up in the morning, I've got my apps and my Googles that I check first thing in the morning. Usually it's told me what's happened in the US overnight. Maybe that's a Tesla share price. Maybe that's an MTN share price. What is your dash tab or your dashboard that you might check in the morning that is maybe interesting to you or very relevant to your workday?
Yeah, Ross, in many respects, I'm a bit like you, but I don't check it the very first thing I get up. I try and 30 minutes to myself so that I'm in charge of myself. But I'm a bit like you. I do look at dashboards. The first thing I switch on actually is the FT app. Because I can quickly check the markets, I can check politics, what's happening. I look to Asian markets, how Asian markets open, how did the US close? Because I know that whatever the winds are there, they're going to come to our shores, so to speak. So check what's happening in Asia, how did the US close? And we have a meaningful US shareholder base. So, if you see the US markets were a bit red, then you say, oh, geez, this thing, whatever good news we have, we're going to get drowned by this red. And if it's green, you look for the, kind of the upside. So I kind of check, I start with the FT and then, up until 9 a.m. when, the markets open in South Africa, checking whole sets of data sets. You spoke about Google, checking what's happening with oil price, is there any sense of how the, currencies might be moving? Because it just gives you a sense of what the day's news might be. And you also want to be a little bit in charge because, I get board members calling me and say, hey, what happened to the share price? I said, I don't know. We didn't release anything today, and it moved up or down. So I like to grab some of those data sets, kind of like the global macro, but also the news flow, what's topical, and then come in the office, depending on what day it is, I can get a dashboard of some of the metrics and some of the monthly reports that we look at. So, but on a daily basis, I'm a bit like you, Ross, checking what's happening kind of global and capital markets so that I can be a little bit more in control of my day.
Yeah, I'm not sure if that says you've got a good future in equity investments or I've got a good future being a CEO somewhere. I think
who knows?
It's good to see that I've got that overlap. But basically just staying up to date. And as you say, Asia tells us what's about to happen. And, America and the US is the dog. We and sometimes be the tail that gets wagged.
Yeah.
But yeah, that is a fantastic 30 minutes you've given us, Rolf. I really appreciate it.
Appreciate it. Thank you.
Very insightful. I'm sure our listeners can take a lot of information from that. And I personally am very excited for MTN's future.
Much appreciated.
It sounds like you've got it waxed. It won't come without its ups and downs, but that's business, that's markets, that's cycles. Thank you very much for your time. I really appreciate it.